Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. I wanted to be here a little bit earlier than this, but that's okay. We do have some stuff going on today, so let's go check the charts real quick. It looks like we got a little bit of time before initial jobless claims and PPI. So yesterday, we got a really good pop off of that CPI coming in line with the treasuries, but like they gave it all up and then they went lower overnight. It looks like we've recovered that little bit dip overnight, but these things are just still in full on sell mode. I think there's a lot of volatility in this, right? So, I'm still hopeful that they'll pull this out and the treasuries will start going up because like the economy really needs it. But just be advised, those sellers are still out there and it's a pretty powerful force. S&P 500 getting up there looking pretty good. Oil, okay, so oil may be trying to make a break out of this range, but so far it looks like they're getting cut back down into it. Gold and silver, ooh man, what happened to gold and silver last night? Wow. Gold just like the conspiracy theorists are always saying that like the machine is works against gold, and I don't think that that's true, but I can totally see why they say that, because it always feels like this thing can never catch a break. Copper though is looking ugly too. So it kind of seems that the metals complex is also very much China being a factor here. Okay. Now, the dollar is also a factor. Look at the dollar, almost to 107 now. This thing is just not stopping. And you can see that the Japanese yen just like continues to slide. We're kind of starting to get to the point here. If I can, where's my daily 6J? We're getting to the area where they intervene, right? This is where the Japanese yen starts doing stuff again. So we're going to have to start putting that on the radar. Maybe not today, but maybe need to put that on the radar. Bitcoin up. Man, when I see 91, I'm like, 100,000 must not be that far away. But it's not on the chart yet, so I'm a little concerned, like, if they can really hold these levels. I kind of feel like that there might need to be a little bit of basing before they can go and jump up for another rung. Because the thing that I'm seeing in Bitcoin is that, like, the people are just not jumping in. Like the Bitcoiners and everything are ecstatic. There is some money that's come in, but, like, the general populace doesn't seem to care anymore. So, I don't know. Good morning, Ray. Welcome, Uzi. All right, so we've got about a minute here before we get the PPI numbers. US PPI month over month. And, hold on. I have my speakers on, don't I? Disc. Okay. Well, we're looking for a reading of spot 2 on both of those, and then initial jobless claims, they're looking for a reading of 220. So I think that the PPI might be a little bit more interesting than the CPI. Those numbers are not, they usually don't hit in line on PPI. But we'll see. There's a little bit more variation to that particular one, okay? But I think that the initial jobless claims might be, that couldn't really move markets if there's a big beat or a miss over there, because the labor market is in a weird spot. So that number, don't discount that number. It's an important number, that initial jobless claims. All right, let's see what we get here. Boom. Okay, so the initial move was a sell, and then they're buying it back up here. I can see core PPI month over month is a spot 3 versus a spot 2. So a little bit higher than expected, but not a huge deal. And initial jobless claims, slightly lower than expected at 217 versus the expected 220. So that does look like that's a sell, but only just a tiny one. So let's see how it goes. TLA trader asks, who will be the next Credit Suisse DXY above 108, and there will be problems in the euro dollar system, Japanese banks or Italian ones, question mark. I mean, I think you're on the right track. I'm not even sure it's, well, I don't know, like, what would be levels in the dollar that, like, really cause problems, other than, like, the dollar is really strong, and how can you have the dollar be that strong and there not be like a financial crisis or something? Like usually that's indicative of there being a financial crisis, right? But I'm just looking at the yields. Like, how low can the treasuries go here? Because remember, last time that the treasuries were in this area, there was like, people were puking out. Banks were like collapsing. So I'm kind of sitting here going like, how high can the interest rates go? And something breaks that the market just can't handle it. Now, one thing I will say, by the way, that we got to cover here, and maybe we'll do a little bit more of a deeper dive after I've eaten here. I got a little bit of oatmeal I want to get rid of. But Powell is supposed to be speaking today. It's later in the day. Due to participate in a panel discussion titled Global Perspectives at an event hosted by the Federal Reserve Bank of Dallas, audience questions expected. This is probably going to be a market moving panel discussion. And I kind of wonder, with the way that the treasuries have been acting since the last Federal Reserve meeting, I kind of wonder if Powell might be motivated to come out a little bit dovishly and tell the market like, hey, these higher rates is not okay. you know ZB down to 75. Wait, what no, is that a typo? You can't get to 75. What are you talking about? You mean it's going to go from 115 to 75? That would be crazy. You know what? I do kind of feel like that at some point we should have some of these treasuries be below par. Like, I have this fantasy that the treasuries, not that I don't want them to go down that far, and I'm not saying that that's like something that's reasonable to happen in any time soon, okay? But the treasury market would be structured completely different if these were below par. Do you offer any no, I don't offer any courses. Maybe I should. I don't have anything against making courses, other than, like, I feel like it's a lot of work, and a lot of the courses that people are offering out there, I don't really feel like they actually provide enough content to justify the amount that you're paying. Like, I don't know. I get this whole thing that's like, well, you can make some money from it and everything, but like, there's nothing anybody can give you that really guarantees you success in day trading. Okay, day trading is just incredibly hard, and the majority of people will lose because it's a zero-sum game. Okay. But I just look at like some of the courses and stuff that are out there, and I compare that to that other courses that I bought. Like for instance, my Series 65 and Series 3. You know, I get a big, huge, thick book, and I've seen some courses out there. They're selling these huge courses, and it's a little pamphlet that I can read in like 30 minutes. Like, come on, you're spending hundreds of dollars for that? Give me a break. So, you know, to make the amount of content that I feel would be worthwhile in a course would be a lot of work and time on my part. So I'm much more likely to make a book. I really want to write a book. So we were discussing yesterday. Actually, you know what? Let me eat a little bit before I go into some big long thing. But Vicky, I have videos that are free. The order flow videos in particular tell you the really important things that you need to know. And then I have a video about like trading the Federal Reserve. I have a video about the treasuries specifically that kind of tell you kind of like some of the key things that you need to know. And then I'm here every day. And a lot of this is you just have to learn from the application, right? So that's why we live stream. Man, they are starting, you know, at first I was like, okay, yeah, it's a sell, it seems fine. They're kind of really trying to push it now. All right, give me a bit. Where should I start? Well, I was talking about a book. So, I've been interviewing for a lot of different companies. Some of them, man, some of them, it's like I'm kind of going through it, and I'm like, you know what? I don't think I'm going to get this one, but I'm still going through the motions. There's one that I feel is really serious. That is for well, we're going to call them a small asset manager, and you know, they're local. And I would have to go into the office a lot, and it doesn't sound like that it would like prevent, you know, like that because of their rules and things like that I wouldn't be able to do the YouTube channel and everything. But the days that I'd be in office, they do start at basically like 8 o'clock my time, so wouldn't really be enough time for us to really do the stream unless we were just going to do like an hour, right? So I've kind of been thinking, well, if that one happens, I would probably still prefer to wake up early and go into work early and get into work at like, you know, 6:30, 7 o'clock, and just do projects, you know, there early, write videos. And like, what would be the things that I could do there? Well, one of the things that I could be doing is writing that book, because I have like the idea and everything, and I've even kind of started writing bits, and a lot of the videos and stuff I feel like can kind of go back into the book. But I think it would be a lot of content. Because it would basically be like a day trader's handbook. So like talking about all of the economic numbers, like literally everything that I feel like that you really need to know. Because I can come in and I can talk about like, okay, so we have some high level concepts. Here are some of the market inefficiencies that are involved and why those work and everything. And that's what a lot of the YouTube videos have been about, right? But there's all of these little details about the instruments themselves, the way that the treasuries tend to go, information about the industry in the business itself that is also really, really important. And there's not any one individual like complete source on this, right? Like, you want to learn about how do treasury auctions work, right? Well, there's definitely stuff out there about it, but like there's not like one little source where you can go and you can get that, and you can get what do I need to know about the non-farms number, and right? So, and it's the thing that people ask for the most, honestly. It's like, well, and it kind of turns into, well, for those things you have to watch the stream. For those things, there's so much there that you just have to watch it day by day, and learn what was relevant that day, you know. But I would like there to be a book. So maybe I could spend some time doing a book if things go in that direction. Things go in that direction, we might not do the live stream, but I would still make videos probably. I'm also thinking, though, I was also thinking about that and was like, what if I like, okay, I had to go in, I have to work, but like, I still run the live stream. I just wouldn't be there, right? Because I still want the video there. I still want the data, right? So maybe I could sort something out that way as well. Okay, so Brad's asking about Trump picks. I want to go into something else really quick, as kind of like to prepare you for that one. Okay, where is my Oh, did I put it over here? No. Oh, here it is. Here it is. Okay. I want to talk about bounded rationality. So I talked about this yesterday on TikTok, but maybe you guys didn't see that video. So I wanted to come over here and I want to talk about it, okay? We're talking about bounded rationality. So bounded rationality is basically why classical economists are wrong so often. So classic economists, they have this kind of idea, they have this theory They don't think of it as a theory, but it is a theory that basically markets are rational and find the optimal solution to every problem. So like people have a strong profit incentive, and so eventually they're going to change things around, sort things out, and find like the optimal way of doing things. Well, the reality is that not everybody has every piece of information. People aren't rational overall, and they're just kind of like doing their best. And so most of the time, especially when we're talking about like consumers and an economy and stuff, people are just making good enough decisions, and they're often relying on heuristics to make those decisions, right? It's kind of interesting. There's so many points when you get into this chaos theory and stuff. I found so many points in the market where it's like doing the optimal thing actually makes you less money. So like I remember in the book Making Sense of Chaos by Dwayne Farmer, he talks about one model that they did where they kind of they would simulate households, and each household would decide how much money am I going to spend and how much money am I going to save away. And then, if they were spending money, they would have more assets and things like that. And then the other people in the neighborhood would also see that you're spending all of that money and want to kind of like keep up with the Joneses to see if this is actually like a factor in the way that the economy works. And when they did it, they found they were able to duplicate many interesting properties that had been difficult to duplicate in other models about the economy and the way that the economy is kind of cyclical and things like that is like people want to keep up with the Joneses, so they spend and spend and spend and spend, and then like things overheat and then it goes down, and then they're saving more and they're going back and forth. And they kind of found that if there's like an optimal savings rate, because classical economists have determined a rate that is like the optimal rate for everybody to save. And they found that if everybody used the optimal rate, like the economy collapsed. So like doing the optimal thing is not actually necessarily the best thing. Okay. Well, so the whole thing is that this boundedly rational investor, that basically means, they want to be rational, do the best thing, but they're not necessarily good at it because, we might not be sophisticated to know the optimal answer, right? You're boundedly rational. That guy, when he goes and makes a trade, it has an impact on the market just like everything else, right? And, that's lots of people. Okay, so it has a big impact on the market. So that's why us over here, the econophysics chats, is what I want to call it. I want people to look up the econophysics. I'm really trying to make this push that there's a lot of stuff here in economics, the new discoveries that are really pushing the industry in a new direction and can really improve our economics. And we want to get that information out there and build a better world and a better market. Okay, so econophysics. They know that investors are boundedly rational. So they're basically going to do what the boundedly rational investor is going to do. They just need to do it first, right? Okay. So this is what we're talking about when we're talking about bounded rational. What book? Well, the only book I know of really for the DOM specifically is the No BS Day Trading course. The trades, quotes, and prices video isn't necessarily so much about reading the DOM, but it is about order flow, and it does talk about the empirical properties of order flow. But I really believe that the best source of information that you can find out there is my order flow video series here on this channel. So go watch that, okay? Anyways, so with this framework, you can kind of explain some of the more confusing things that might happen in the markets. So you'll so often see these things where, a piece of news comes out or there's a change or whatever the deal is, and the market just goes full bore into some market narrative that to us seems like way oversimplified. And I think a perfect example of it is the selling in the treasuries, because as far as I can tell, the selling in the treasuries and the strength in the dollar is primarily about Donald Trump being elected president. It's the Trump trade. And the Trump trade is basically Trump means money, so buy stocks and sell treasuries. And he's going to save trade, so the dollar's going to get strong. Like, that's the whole thing. There's some real problems with that. Like, Donald Trump wants interest rates to be low. So how are we gonna? And Jerome Powell is lowering interest rates, and you know the labor market is hurting. Like really, if we don't get lower interest rates, the jobs market is just brutal right now, man. I go on Reddit. Reddit is always kind of like sanguine about the computer science market. But you can kind of see the sentiment getting worse. There are even more people over there looking for jobs, talking about the job market and what, it's not, we are in a white collar recession. Just straight up, we are in a white collar jobs recession. We are. There's a lot of people looking, and I kind of feel like it's only a matter of time before that would drag the overall economy down if we don't reduce interest rates, right? So I kind of feel like interest rates do kind of inevitably have to come down. But right now, it doesn't matter. And right now, what's going? Well, it's the Trump trade. And the Trump trade is basically all about boundedly rational investors using a heuristic, right? Now, this kind of becomes interesting when you think about how do I use it? Because have you ever had this experience where maybe you're in a startup or you have a boss that kind of has started it up a long time ago and has that kind of mentality, and all of a sudden it's like, okay, here's the thing that we're doing, and everything is we're going to go straight down that path, right? And you're often sitting there like, okay, but like, this isn't a good decision. You're way oversimplifying things, right? Why do you get so many of these people that are like big business people, decision makers, and they will make such seemingly impulsive strategic decisions based on really oversimplified views of the world? Well, it's because they know this thing that we were just talking about, that people are boundedly rational. And so it's very frequent that the things that end up making you the most money are kind of like these really oversimplified, kind of stupid heuristics. And they've learned to just accept that and go full bore. And me being decisive and quick and fully dedicated to it is going to matter more, and is going to make me or the business more money than really taking my time and thinking it out and all of these things. Boundedly irrational. I see this in Donald Trump. I see this very strongly in Donald Trump, where with his business decisions particularly, he does that. He will just, okay, here's what we're going to do. And all of a sudden it's just, full bore. And you're like, well, but I mean, there's this and this and this. Maybe they'll do this. But no, it's like sometimes what he's going to do is just like really easy to predict. And it's kind of funny to watch all of the, supposedly big-brained upper-class economists get caught off guard, or political analysts get caught off guard by what he does. And I think that is what is happening with Donald Trump's cabinet picks. So Brad says, the Trump administration picks crazy, interesting, or what? I may have to run for Senate if he keeps plucking people. So what's been happening is Donald Trump has been taking all of the people in Congress that have basically been the most pro-Trump, I guess you could say, and he's putting them into cabinet positions. and the really controversial one yesterday was Matt Gaetz. So the reason that Matt Gaetz is controversial is because there was an ethics complaint filed against him for like sexual misconduct, and basically they're accusing Matt Gaetz of like being a party animal and like what were we saying, like trafficking a teenager across state lines is the complaint put up against him, right? And Gaetz kind of got in front of that and said that it was all nonsense and everything, but there was still like a probe in the Senate that I guess will never finish now because he's basically left the Senate and he's going to become Attorney General. It's also kind of controversial because, well, for one, Donald Trump always had trouble with the Attorney General. A lot of his picks for Attorney General didn't work out. They didn't really do the things. They didn't really pursue the things that Donald Trump wanted them to. And Matt Gaetz will. Matt Gaetz will. And, you know, if you want somebody that's going to go after the swamp, that's going to go after, you know, because there's all of these things where they're saying that there's like election fraud, for instance, right? Or Hunter Biden corruption. I don't know if they go after Hunter Biden specifically, but, you know, there's a couple of other kind of cases that are similar to that. There's this whole thing with Taleb, for instance. I think that would probably be one that they might pursue, where she was like improperly paying her boyfriend and all this crazy stuff. So there are a lot of people on the Democrat side and kind of more of the establishment Republican side that are a little bit terrified of what Matt Gaetz is going to do. They said that when it was announced in the Republican conference that like everybody groaned. and you do kind of sit there and have to wonder, like, okay, like I see what Donald Trump is doing. He's using this heuristic and he's saying, okay, who are the people that I trust because they've been like loyal foot soldiers for me. And I think he's also going along the line of who's somebody that thinks that has told me this is what the agency should be doing. This is how we should be transforming the agency. And he's putting disruptors in. Okay. The whole thing is that this kind of boundedly rational framework works in a financial market, but does it work in politics? I'm not so sure. I'm not so sure. So it is kind of crazy. I kind of wonder to some extent, like there are some things that Donald Trump wants to do that you're not really going to have the full support of the Senate. Okay, like this whole thing about. And I don't think that this proposal was that serious, but he's talked about we shouldn't have any income tax at all. It should just all of the funding of the government should come from tariffs, right? I think there's some real problems with that. Like the government kind of has an incentive to get as much money for themselves as possible, and so we always kind of have to fight that and try and put a lid on it. There needs to be a certain amount of government that's good for society. I feel that government is too big right now. Okay. And it's just kind of like a constant fight. If all of the money was coming from tariffs, you know, how would that change the way that government functions? That's if government wants more revenue, they need to increase tariffs. And I think that could kind of be nasty because it does have an inflationary impact on the goods that you buy. If it gets too far, certain, you know, targeted tariffs are necessary and good. Every country has tariffs to some degree, right? So I just don't see a Republican Congress like trying to push that one through. It's just as an example, right? If the tariffs only income happens, I think it will turn into a national sales tax. Well, yeah, it kind of does become like a national sales tax, doesn't it? But here's the thing that's messed up about it is, okay, why does Donald Trump want tariffs? Donald Trump wants tariffs to protect American businesses. He wants more American businesses to be building things. There are a lot of things that come from China now that you just straight up can't build in the United States. Like, we don't have the stuff anymore. It all left a long time ago. And I think it's important that we build it back up. And that's something that Donald Trump, wants to do. But Donald Trump wants to be like full bore into it. We're going to put tariffs on everything so that there's an advantage to internal U.S. companies, that the product from the U.S. company is going to be cheaper than the product from China. Okay, so it's kind of a national sales tax, but only on stuff that is imported. So presumably in an ideal world, according to Donald Trump, everybody just stops buying stuff from China and we are only buying stuff that's made here in the United States, right? Right? Okay, but then at that point, nobody's importing anything, and then where do you get your government revenue from? Right? Like, the end goal of that doesn't actually work. I don't know. There are certain things that would always have to be taxed and would always have to be imported, I guess. I'm all about let's reduce the trade deficit. Some of these things, I don't know how serious Donald Trump is about a lot of these things, like the whole thing about national or the tariffs only. I kind of think when he talks about that's kind of like a dream that he knows is never going to happen. It's kind of like his favored pipe dream, right? By the way, on this move back here, I've seen a pretty strong reduction in the activity on the offers. So I'm not necessarily seeing like super strong stacking on the buy side. So I'm not going to come in and say like there's going to be a strong buy trend coming. It's possible, but this is a really pretty solid full reversal that we've seen. It works if the dollar becomes super strong. Yeah, I kind of think that a lot of this stuff is like pipe dreams or like negotiating tactic, right? Like he's going to go way super to the extreme with the real intention here. Like in all seriousness, I think that the real goal here for Donald Trump is to get a favorable trade deal signed with China that encourages more business to come back to the United States, but doesn't like kill the global economy, right? Like that's the end goal, I think. And I think that a lot of the things that we're saying, like across the board 20% tariff is negotiating. He can't implement that. Congress isn't going to pass that for him. So I think it's negotiation. Right? But there are other things that are maybe going to be close, like it could happen. It could happen, but it's going to be a tight race in Congress. So like one thing that I think is good, would be really interesting is like healthcare. Are the Republicans able to rescind Obamacare now? And what are they going to replace it with? And that's something that even with the margin of victory that they have in the Senate would still be really close. And to get the healthcare set up that you want, if you actually had a replacement plan, you don't think that they would rescind it?
Block by.
I mean, they should have the votes. No, wait, we're talking about Obamacare as too big a source of funding? Okay, well, I still think that Republicans, once they've taken care of some other things, that healthcare kind of becomes like the big remaining issue. Oh, what do insurance companies do with premiums? Well, but the premiums have gone up because the costs of everything of care have gone up, because Obamacare basically did nothing to deal with care and made everything more expensive. I saw this chart the other day. I wish I could pull it up for you here, where they kind of showed like the cost of healthcare, right? And it's kind of like it's going like this, and then Obamacare is implemented, and it goes like this, and you're like, oh yeah, Obamacare was actually a bad idea. I think the Republicans still want to get rid of it. What do insurance companies buy with your premiums? Well, supposedly they buy care, but actually I think that mostly what they do is they buy stuff in the markets and they manage that money around, right? Yeah. No. I did get it. I said, well, the main thing people think about is this, but they do buy. They loan a lot of money to the government. This is true. I don't think necessarily that rescinding Obamacare would reduce the amount of securities that insurance companies buy, though. That was the entire point of Obamacare? So how is that Obamacare increases the amount of bonds that insurance companies are buying? Yeah, if premiums go down, it sure would. Oh, for sure. But I don't think that the goal in a case like that would be for insurance premiums to go down necessarily, just to not grow as fast. Right? I mean, okay, so let me kind of approach it this way, okay? The middle class has been squeezed for the last like 30 years. Where are those things coming from? And those things are primarily coming from things that Obama did in his presidency. These are the reasons why millennials are hurting so much. Is that, okay, like your cost of healthcare has gone up, your education costs have gone up, right? Like all of these things that like the government deals with, right? So what is that chart? How can I search for that? This is chart of inflation by different goods. Insurance. Is it like that? Like, yeah, it's this thing right here. Can I get it to show me the whole image? Right? Where they're like, okay, the things that most things, especially things like TVs, are actually getting cheaper, but all of the things that the government is meddling in, namely healthcare, college, and housing, have all been going up like crazy, right? So if you come in and you stop the college loans, okay, you fix this one. If you come in and you start building more houses, you fix this one. What is the remaining thing in the economy that's hurting people? It's health insurance. It is inevitable that in a Republican Congress, like, they have their agenda set out, right? But like, let's say that they run their agenda, it works out, it's really good, voters are happy in 2 years, and Republicans maintain, or maybe even, it'll be kind of kind of against them. But let's say that they weathered the storm and they still have a majority after the midterms. Then I kind of feel like that the next thing on the agenda is insurance. They had every opportunity when they passed Obamacare to just do the universal health care they've been whining for years. No, that's not true. That's not true. I really feel that Obamacare was like, well, we don't have the support for a universal healthcare system. So Obamacare was kind of designed as a Trojan horse. It was kind of designed to fail. And it was kind of, in a way, I think, designed to increase premiums. And why? Because their whole thinking was that, people would feel the squeeze, and then in a decade or two, they would be more amenable to universal health care. Except for that it hasn't worked out that way. It's just kind of people have been like even less enthusiastic about the government controlling their health care, I feel. They managed to convince the anti-capitalist left that making people buy a risk-based product from for-profit publicly traded companies was good. Well, that was true in the political side. That's true. They had the legislative power. No, they did not. They did not. Sorry. When it was like Obamacare, okay, they only had like a 2-vote margin in the Senate or something like that. And all of the, what do you call them, like Claire McCaskill and, like those moderates were all siding with the Republicans. That was why so man, this was so interesting. When it happened, I was kind of like, what? How this went through was basically, there was all of these different proposals out there. Like, how are we actually going to do this? Because the goal was, like, the real problem at the time was, you have a serious healthcare condition, then you lose your job, and you lose your insurance because of your job, and because you don't maintain consistent insurance, the insurance company refuses to cover conditions when you get back on insurance. And so it's like, if you have cancer and you lose your job, right, then you lose your insurance, and then all of a sudden the cancer isn't covered, and you have to go into like insane amounts of medical debt just to live, right? So that was like the problem, or at least the problem that they were presenting to try and, justify changing the healthcare system, right? And there's all of these different proposals out there, and like nothing's really getting the support to get across the Senate. I remember thinking at the time, will they actually be able to even pass something? Because it seems like that it's just too difficult to get something that they can pass over the line. And then something happened. And that something that happened was somebody on the Republican side, instead of just kind of saying no to everything like was kind of the Republicans' plan, they had this kind of plan that they had sitting around for many, many years, and they just couldn't help themselves, and they put it out. His name was Bennett, and I remember this very well because that was my representative. Okay, when Bennett ran the next time in the primaries, he basically got destroyed at the state convention because all of the activists were so upset about what he had done, because he basically gave us Obamacare. If it had not been for his proposal, because basically what happened is he put out his proposal that was like, oh, well, we're just going to force everybody to have insurance, and if not, you tax them. This is where that idea came from, right? And as soon as a Republican presented a plan, the Democrats pounced on it, like by saying, no, but you can't oppose this. This is your plan, and they pounced on it, and that's how that became law, right? And it was only because the margin was actually quite thin. And then what happened after that basically was it was so controversial that Obama basically couldn't accomplish anything else. After that, the moderates weren't willing to go along with something like that ever again after that. So I think the idea that they would have been able to pass a universal healthcare like that they would have had the votes in the Senate to do that is absolutely ridiculous. They did not. They did not. And I mean, more broadly, I think that pretty much everybody in the Democrat Party, except for maybe Bernie Sanders, understands that a universal healthcare system for the United States probably wouldn't go very well, right? So, but it was something at the start of Donald Trump's term. They tried to get rid of Obamacare. I think that they would have the votes to do it this time, but it's like not on the agenda. So I don't know if that's actually going to happen. But you know, if they're getting, you know, fixing all of these other things that they want to do, healthcare is a real possibility. It is. I have this video about like what are the things that can happen during a Trump term, and this is one of the things on that list. So, why were we talking about that though? I don't even remember because this was kind of a little bit of a detour for a little bit, right? Well, let's see here. I was talking about the appointments. Oh yeah. Well, I guess what I was saying is that like, okay, so if Republicans do try to present their own healthcare plan, you're going to need Trump allies in the Senate to get it through. So I'm kind of sitting here watching him like pull every representative out that's like his most supportive and going like, does this actually like weaken his power in Congress? Kind of depends on who gets, you know, appointed in those people's place, but I do wonder if maybe some of the decisions that are being made here on the cabinet are a little short-sighted because it really smells to me like bounded rationality. You know, I wish there should be a word for, you know, intentionally using oversimplified heuristics to take advantage of this fact that people are boundedly rational. But you know, I think that the whole thing here is that like, okay, investors are boundedly rational. There are situations where those things that those conclusions that they come to end up being wrong and wrong in a big way. And that can yield some of the biggest opportunities in the markets, right? So when the crowd ends up being dead wrong and you're on the other side of it, and that's where the biggest winners come from, right? So the key here is understanding when the more nuanced and sophisticated thinking matters. And I kind of personally have always thought, and I had never thought about it in this framework, but I've kind of always gone with this approach in politics that like the politicians, I don't know how they do it, but they just like know what's going to happen and they're able to do the savvy thing a lot. And so I kind of feel like that in politics is not the same thing. And that the kind of framework that Donald Trump uses to make decisions in business might not necessarily work in a political context is kind of what I'm concerned about and what I'm getting at. You get what I mean? As he says, the Onion bought InfoWars. Really? Yeah, I don't know. I don't care about InfoWars anyways, but good grief. That's weird. That's going to be weird. I saw all of these people say like that Alex Jones should be the press secretary. We don't know. Do we know who it is yet? I think there's somebody I've never heard of before that's the top runner for it, but that would be a little weird. I don't think that he will be in charge at InfoWars anymore if the Onion bought it, huh? we'll see where it goes. And Onion is kind of like, after Donald Trump got elected, the Onion kind of like went downhill big time, didn't it? I never really thought it was funny, to be honest with you. I find it to be hilarious sometimes. Now, while we're talking about like what will happen in the first Trump term, and like how realistic are some of these proposals and things like that, there have been a lot of proposals that he's made, like there should be no tax on Social Security. I kind of agree with that one. that to me is so insane that like you get taxed, and you get taxed a certain amount to fund Social Security, but then when it gets paid out to you, you also get paid. You also get taxed on the income that comes from the Social Security. Like, what? It's absolutely retarded. And it wasn't always that way. It wasn't until like the early 2000s or something like that they changed it, right? But you know, so that's one proposal, and then there's another one that's like there should be no taxes on tips, which I don't know. Like if you're a server, I think that makes sense. You would have to be a complicated rule so that it doesn't get abused, because otherwise I'm going to be like, hey guys, just send me tips all day. Oh, by the way, I totally forgot we had a tip earlier. Do you think that Trump will pay back the national debt with Bitcoin? Oh, okay. Yeah, we can talk about this in a second, because we're kind of going in that direction. Yeah. There's a bunch of those proposals there. And you think, well, he's not serious about that. Because no taxes on tips, that wouldn't be practical. Well, they could maybe work it. They could maybe make it work. It would have to be more complicated than that. There'd have to be a lot of rules around it, but they could maybe make it work. But it actually is very serious, and I'll tell you why it is very serious. There are tax cuts that are set to expire in 2025 that the Republicans very much want to be extended. So that will be, okay, there we go. Now they're pushing the highs. That will be agenda number one. That is the stuff that's going to happen in like February and March. It will be Republicans preparing another tax bill to, one, extend the tax cuts, and two, maybe make all of these kind of little changes here and there on those things, like no taxes on Medicare. That one is going to happen. Okay, Bitcoin. Let's talk about Bitcoin. The Trump administration has kind of made this shift for whatever. Donald Trump was like, didn't really like cryptocurrencies this first term, and then this time around he's basically been like, I'm all in on crypto. He's been listening to all these kind of like Silicon Valley tech people, and a lot of his like biggest supporters in, you know, during the Biden years became big advocates of crypto because of the whole thing that happened in Canada with people being debanked and all of this sort of stuff. And so they've been pushing crypto super, super hard. So crypto is becoming relevant again because of Donald Trump, frankly. So we should get into it a little bit, because there's a couple of things that people want to have happen and are talking about that are kind of like, okay, it's kind of weird. So the first thing that you have to understand is that Bitcoin has been defanged. So Bitcoin in its original conception from the Bitcoin white paper was designed as something to replace traditional currencies. It was something created by the cypherpunks, these people that believe that people have a right to privacy, and they want to create technologies that give them privacy and that the government can't get around. Hasn't worked out so well because the government puts backdoors in everything, as we have found out. Okay, but that's what the cypherpunks were about, and so they had this idea: we will use cryptography to create a currency that the government can't control, and that's what it was created for. And what happened was these guys kind of took over Blockstream. They took over the development of Bitcoin. And they decided that we want the people that are mining to be able to make money from the mining, especially in the long term. And so they introduced this change into Bitcoin that basically made it so that you can skip the queue. There can only be so many transactions verified every time that a block is found. And a block is found about every 10 minutes. Okay. So they introduced a change that basically allows you to attach a fee to your transaction. So you make a transaction and you say, I'm willing to spend a ton of money, more money than anybody else out there, to make sure that my transaction goes through in the next 10 minutes. And then that fee is paid out to whoever finds the block. Okay, this was not a part of the original Bitcoin protocol. Understand? Okay, it was something that they added in. Okay, with the kind of for the intention that it would be income for the miners. Okay, because eventually Bitcoin, you don't find blocks anymore, or the what you make when you find blocks or you do transactions goes away, and so the only way that you make money is from the fee at that point. Why would anybody mine? Well, okay, because of that. Then what happened was people started using the chain more, and it basically got to the point where, because of people spamming transactions and Bitcoin just getting so large, that there were more transactions coming through than the network could handle. And so you get this huge backlog where you put a transaction in and you're putting like the minimum fee on it. It might be several months, if not years, before your transaction gets verified. And so in order to use Bitcoin for its original intention, which is as a currency, you have to pay big time money to use it. You have to attach a huge fee for your transaction to get picked up, right? So people saw this and saw this coming, and Satoshi even saw this coming, and he said, oh, well, all we have to do to solve that is increase the block size. You increase the size, the amount of memory that the block uses, and that will increase the number of transactions that can be handled with each block that gets found, essentially, right? That's the way to scale Bitcoin up. And what happened was there was this big disagreement, and the Blockstream guys, who basically at that point had all of the money and all of the power, and they took control of the subreddits and all of the kind of like the Bitcoin information outlets and everything, and they had a majority of the miners with them, and they basically won this internal battle over whether we should increase the block size or not. And they basically decided we are not going to increase the block size. So that was when the great split happened, and Bitcoin Cash was what came out of that. Bitcoin Cash was the one that was trying to follow the original vision of Bitcoin, which was that you can use it as cash. Okay. This essentially defanged Bitcoin. When you can use Bitcoin for everyday transactions, I'm going to go to the store and I'm just going to buy things with my Bitcoin. It is a threat to currencies like the dollar. And the government is very, very scared about that, right? But basically what happened was they defanged Bitcoin. And you just note, after they did that, that was when we started talking about things like, oh, maybe we'll allow futures at the CME for it. Maybe we'll be able to get ETFs. Companies are going to buy Bitcoin, all of these sorts of things, right? Once it was no longer a threat to the power structure, Once it was defanged, it was like, okay, like do whatever you want. You can have it, sure. Okay. Now I gave you guys a ton of background information. I don't know if you guys cared about it, if you knew that stuff or whatever, but I kind of feel like that it's some important background information to understand things that might happen in Bitcoin in the future. Okay. So you gotta understand, you can't really use Bitcoin for transactions anymore. It's just not practical. They had this idea called the Lightning Network, that you would have secondary networks on top of the chain that were faster and handled transactions, and then they would just use the blockchain as like verification in the back end or something like that. But the whole Lightning protocol has been a dismal failure. Like, you know, it's been like almost a decade now, and it's not working. It doesn't work, and they've basically abandoned it at this point. So Bitcoin itself doesn't work, and nobody cares, right? What happens now is people put money into Tether. Tether then prints Tether for them and gives them a loan. So you might say, okay, I'm going to give you $1 billion, and then. But actually, it's probably more like I'm going to give you $500 million, and then Tether prints $1 billion. So you're running 50% margin at that point, right? 50% of it was just made up out of the air, and then you turn around and you buy Bitcoin, right? And then the Bitcoin can basically be used to back the Tether, and that's basically how the cryptocurrency world has been functioning. Okay, so the entire cryptocurrency ecosystem at this point is basically being propped up by outright fraud. But here's the thing. Because Bitcoin is no longer a threat to the power structure, because it's been defanged, nobody cares. There was a story 2 weeks ago that the Department of Justice was investigating Tether, and Tether was like, no, and I'm kind of like, well, like, if they were investigating you, wouldn't they kind of know and you not? They said it's just FUD. Nothing really happened of it. Well, we just had a new administration, an administration that says that's pro-Bitcoin. Donald Trump said, like, if Bitcoin is the future, it seems like some people have convinced him that maybe Bitcoin is the future. If Bitcoin is the future, we want to be the ones mining it and controlling it and all of these sorts of things. So there's the big push that Blockstream has been making after they defanged Bitcoin was, okay, now we need to convince companies and sovereign governments to buy Bitcoin. And they succeeded with El Salvador. Not a whole lot has come from it, but now that Bitcoin is going up and El Salvador is up on their position, I got to tell you, the way that they played that and the way that they got into their positions was just like the worst trading I've ever seen. But, you know, they're buy and hold. It's turning out for them in the long run. Will it help them and their economy? Maybe it might. And then maybe other small countries might be like, oh, we need to buy Bitcoin too. And now all of these different governments are buying Bitcoin. And then the value of Bitcoin goes up and up and up and all of these sorts of things. Okay, so now we come to the question. I hope you're still there, 21st Dimension. I'm sorry, I forget what your other name is, but I appreciate the donation, okay? Will Trump buy back the U.S. national debt with Bitcoin? No. So I think that what's likely to happen in a Trump administration is the government owns a lot of Bitcoin already, and they will just continue to hold it. And they will just hold it forever. But this idea that, like, we're going to pay back the national debt demonstrates a massive misunderstanding about what the national debt actually is and how these things work. So, what is the national debt actually? When you hear the word money, what you should be thinking is debt. And when you hear the word debt, what you should be thinking is money. Because they're the same thing. All money comes from debt. So, what if everybody everywhere paid back any debt that they had? All US citizens, all companies, and the US government itself paid back all outstanding debt. You know what would happen? There'd be no money left. Because all money is debt. It all comes from debt, guys. When you go to the bank and you take a loan out, you are creating money. People always say, man, it's not fair because the rich, they can just print money and pump assets with it. That's kind of how these things have been working, right? They give the banks some money and then the banks pump the markets up with it, right? Well, you can do the same thing because you can go and get a loan. And when you get a loan, you're printing money. And then you can do, you can put that money into whatever kind of business venture that you want. Like there's a huge, strong incentives for you to borrow money and use it for businesses. Okay. There's only one caveat, and that is that you have to pay it back in the future. So you have to have the ability to pay it back. And, if you're putting it into a successful business, then you can be able to pay it back. Okay. That's the thing. So when more people are taking out loans, that means that the money supply is growing faster. Right? That's the way that the Federal Reserve controls interest rates. The people think that like the Federal Reserve like decides how much money we're going to print, and then they print that money and they give it to the end user banks and they split it up and all of these sorts of things. That's not how it works. We have proven empirically that the way that it works, I mean, the people told us that that's the way it works, but when we look at the system and how the transactions happen and everything else, it turns out that understanding of it was, and maybe that was the intention, but it turns out that that's not how it works. The way that it works is when you take out a loan, the bank prints money, and the banks are basically the ones that decide how much money is being printed, and the Federal Reserve can just tweak some things on the back end, like the federal funds rate and the reserve requirements, to control how much money the banks can actually print. So if they need things to be tight, then they have the higher interest rates, and the banks are going to require more from you in order to print money for you, essentially, right? So the idea, you think about it as like a regular person. You, as a regular person, you have debt, and that debt is completely unproductive, right? That debt holds you back because you have to pay it back, and you can take out tons of money to buy like a new Ferrari or whatever, and you're paying thousands of dollars a month on it, and that's $1,000 a month that you could have put into the market and invested. So you really want to get that, pay that debt all off, so that you can put as much money as you can into buying productive assets that are going to make money for you in the future, right? That's the layperson's kind of approach to finances and debt, and that is the way that you should do it. Is you want to have as little debt as possible and be putting as much money as you can into savings, into stocks and things that make money, or into a small business. Okay. So we think, okay, that should be the way that it works with the national debt, right? There's a debt, we have to pay interest on that debt. And so what we want to do is get that debt as low as possible so that we don't have to pay that interest, because that interest is a drag on the economy, right? Well, yes and no. That interest is a drag on the economy. So that's important to note, because it's getting so big that I don't know if the economy can handle it. And it might, that could spiral out of control. It could. Okay, but you will never get to the point where you pay off the national debt. That basically can't happen. Well, I mean, I suppose in theory, maybe it could happen, but in practical terms, you will never have that. So think about like why do we need debt in the first place? You need debt because what people want to do and what people have the ability to do is always greater than what we have right now and what we've done. Because we're always growing. And so that's why you need to be able to create money, debt, essentially, to fund those things and get them faster, right? An economy with no debt is a stagnant economy that doesn't grow. Okay, you need a certain amount of debt in an economy for it to grow. If you to come in and you paid off the national debt with Bitcoin, for instance, right? Then there would be no dollars anywhere. There'd be no dollars anywhere. Nobody would be able to pay anything. Nobody would be able to build businesses. Do you make sense? I'm a smart cookie. Well, thanks, but I don't know if what I'm telling you is because I'm so smart. It's just because I've been obsessed and think about it every day for the past, 15 years or whatever. When I get into a monologue like this, especially if you notice that I'm not stuttering a whole lot and things like that, it's because I've given that speech in my head 1,000 times. And this is something that I think about, every week, at least. So what if you paid off all debt? Well, you can't. There'd be no money left. Now, this is kind of of course, that's just kind of like a theoretical setup, but what does it mean in practical terms? Well, in practical terms, it kind of is a little bit of a warning about Bitcoin, right? Because Bitcoin ultimately is an inflationary currency, and you can't. If all money was based on Bitcoin, if we were all using Bitcoin, right now we don't use Bitcoin, right? Right now, Bitcoin is just an asset like gold that you buy. You print money you print Tether. And then it goes to the exchange, and then it just sits there in the exchange. People aren't transferring Bitcoin between each other. Like that's not really happening anymore, right? You bought another TLT? Oh, is that? So are you saying that we're gonna sell it? We're gonna sell hard again? I don't know. It kind of looks to me like that. You had one guy covering and then another person overall like pushing it up, but that maybe that flow has subsided. They did push quite a bit further through here than I thought. So it was like 16 and then it really went, didn't it? Okay, so because you don't make debt with Bitcoin. If Bitcoin was like a world currency, it would be a complete disaster. Because no debt, no way to print more money at will, like by saying, okay, banks, go print more money, we're going to reduce the interest rate. Yeah. You can't do that in Bitcoin. It's just a new block is made every 10 minutes, and that's it. The supply is fixed. Bitcoin is fixed supply, deflationary currency. Okay, so what that means is that all of these things that we need debt for, you can't do with Bitcoin. If there's a recession, you're just in a recession and there's nothing you can do, because how are you going to stimulate the economy? You can't just print more Bitcoin at will. Yeah, it has a negative exponential inflation. Well, I don't know. Like, it seems to me that like with Bitcoin that you get like a move like this. Oh, it goes up and then it kind of comes back and then it goes up. And each one of these subsequent moves is becoming smaller and smaller. So I don't know if it's exponential, if like the value of Bitcoin really continues on forever. I kind of think that there is a upper limit to it and that we're kind of starting to reach it. But yes, it's intended to be quote unquote deflationary. Bitcoin is basically intended to always increase in value. So if you base your economy on Bitcoin and Bitcoin collapses, you're screwed. This is like what happened in El Salvador, or is it El Salvador? What's the country that was buying it? Okay, they bought it, and then FTX collapsed, and like all of that they spent was like not helping them. Now they're probably fine and they're going to look super smart. But in the interim period, it was really hurting. Everybody in the country was kind of mad about it, and it was El Salvador. It was kind of a thing, right? So now we're moving into this world where perhaps because Donald Trump has become president, you might see countries start to buy Bitcoin, right? What happens when the inevitable collapse comes? It's going to hurt. It's going to hurt. I'm worried because here's the thing. Again, Tether is fraud. They are giving loans out. They are not a bank. They are not authorized to be a bank. So they are giving loans. They are basically creating dollars in the form of Tether and using it to pump up Bitcoin. And it is like this insane size. They say that like every Tether is backed, but that is not the case. And they don't even really let you like redeem the Tether. It's just you can only put money into it and pump up Bitcoin with it. The Department of Justice is supposed to be investigating them, but you know what? Matt Gaetz is super pro cryptocurrency. Do you really think that Matt Gaetz is gonna, be the Bitcoin Javert and aggressively pursue litigation against Tether to expose the fraud in Tether? No, they're not. They're not going to do anything about it. So at some point, I'm kind of concerned that because of Tether, that you could see a complete. Because really, if the Tether fraud was exposed, like, oh my gosh, Bitcoin would lose like 99% of its value. It would be insane. Okay, like we would be back in the sub 20K range if the Tether fraud was exposed. Okay. But if it doesn't happen in the Trump administration and like actual countries are buying it, now all of a sudden you have all of these countries that have big time to lose if you actually uncover the Tether fraud. So is the Tether fraud ever actually going to be exposed? I'm kind of starting to wonder. And at that point, then it turns into like the only way that people are going to learn, the only way that people are going to figure, finally have to accept and understand that Bitcoin is really bad for society is going to be because like a country goes under because of their Bitcoin investment. Like it's really I'm really concerned. We're probably talking about something that happens like 10 years in the future. But like that's kind of the trajectory that I see things going. So in the short term, I guess what I'm saying is I'm bullish Bitcoin and I hate it. Because I don't think Bitcoin is good for society. But it looks to me like the value of Bitcoin is going to go up, and that there's a really big risk with Bitcoin, but that risk is basically that the can has been kicked down the road. Out +5, bend the knee. Oh, I missed that Octavius went short there. Now, one other thing, going back to this discussion about things, right? The issue is the amount of debt that you have relative to the size of your economy. So you need debt in an economy to grow that economy. The reason why we have a problem is not just because we have debt. It's because we have too much debt and we are not getting growth from that debt. Right? It's not being put into productive enough things to grow the economy, the rate that we need to pay that future debt off. That's why there's a problem. You were describing the law of diminishing. Yeah. Well, it seems like that you get diminishing returns in Bitcoin, but maybe it's a temporary thing, and the next move really ends up being another big 10x exponential move for Bitcoin, where all of a sudden we're at $1 million, and it's like, what? That's the way that it's happened in past things. Is like there's some big level and it's like, oh, can you imagine if Bitcoin was $100 and then all of a sudden it's worth $5,000, and you're like, what happened? And it 10x's, right? But we since that 2017 time, it hasn't been doing that. It's been it's like a 50% gain or something like that. Right? Obsidian says, I'm still interested to study that indicator you have on your ZN chart to compare the price moves to how the resting orders changes. So the resting orders indicator itself, it has been pretty interesting. So again, I want to tell you, I have two data series here. Okay. I forget what their names are. You come in here on the resting orders. There's actually like 4 different data. Oh, sorry. There's actually 1, 2, 3, 4, 5, 6. Yeah, there's 6 different data series that you can use. So one is, what is the max that the bid was? So basically, it's going through like each price, and it's saying what was the max of it during that time, and then adding all of those together. And the min is the same thing. Okay. So it's basically saying like what was the maximum and minimum that all of the bids and asks added together were. Okay. And then what it's doing is it's saying what is the max difference and the min difference. Okay. So when you look at the bright white line, what it's saying is the difference between the maximum amount that was put on the bids compared to the asks. That's what it's saying. So the line isn't saying there are more bids than there are asks. The line is saying that the stacking and polling is greater on the bid or the asks, essentially. Right? And this white line is basically going to turn into these are the stacking, and the darker line is these are the polling. But I notice that they kind of go together. So it seems to me that when we have a strong move up, that this line tends to move over down to here, and when you have strong move down, it kind of moves the other way. And sometimes it just kind of goes sideways, but I'm not sure I've really seen a move where like this went up really strongly and this was flat. So it may just be a coincident indicator that doesn't really help you, right? But if it's not, if it's something that like this really suggests strong trends, maybe we could use it as a filter. I have to get it on seer charts to study it for yourself. Yeah, so the thing that I'm still getting at is like making a data pipeline. I guess maybe I should like, I don't know how I would make the data pipeline thing available to you guys so that like you could mess with it too. But basically I want to have it so, okay, you export the data, and we could put one of these things on Sierra charts. So you're just exporting the data into this one format, and then you've got it in the data pipeline. And then, regardless of what platform you're on, you can use our Python analysis stuff. But I don't know how I would turn that into a product for you guys. So maybe it doesn't help. Okay, Lewis Hill says Moon Boys are calling for a 500k Bitcoin. Think of the market cap. Yeah. Well, so we're the next big kind of level is 100,000, and in past bull runs, you get like these several times sort of move. So if it were to move to 500,000, that would be like a 5 times winner. But as of late, it seems like that doesn't happen. That like Bitcoin is gonna move like double, so you would see like 150k, and that you're getting a lot of diminishing returns. Like one of the key the key kind of question I have here is, does the average person ever jump into it again? Because even though there's things happening in Bitcoin, even though Bitcoin is like rising and is kind of like starting to do crazy things again, you are still not seeing the interest from average people. After the FTX collapse, the public generally stopped caring about Bitcoin. They're like, oh, well, it'll probably go up, but that game is not for me. Do we get another run where like the public really gets involved? Maybe. But then you get that risk where like it comes crumbling back down, and like people can only get burned so many times, I can't believe it's not butter. Dude, there's this EDM song by Dylan Francis that's basically it has this vocal in it that says, I can't believe it's not butter. And they made this this music video that was like, okay, like let's have a music video. They're going through and they're in a party and everything. But then they go back and they're like, no, it's not crazy enough. So they do it again. And then they're like, no, it's not crazy enough. And so they do it again. And like on the third run through, it's basically like a porno. But the song is like one of the hardest hitting, wildest, crazy kinds of songs, and the whole thing is just so funny because they're all like, you can dip your lobster in it, but I can't believe it's not butter. TLA says we may see some big bond buyers coming in for the weekend. I don't know. Well, so when I came in today, my thinking has been, you know what? I kind of suspect that Jerome Powell might say something a little dovish because the treasuries have been going down, and that's kind of like not helpful for their economic agenda and everything. So this might be the point at where Powell starts to come out more forcefully against it, because he kind of said in the last thing, it was like, well, yeah, they're selling it, but like, let's just kind of see how it goes. It's not like a huge problem for us yet, but yeah, maybe in the future we might have to do something. That's basically what he said at the press conference, right? Well, it kept going down since then, so maybe he says something today, right? So that was kind of like my thinking, but my thinking was like, okay, so like let's see what PPI does, and then it quiets down, and then maybe you take the trade just before he speaks or something like that, if you really wanted to do something speculative like that, right? Instead, what happened was we had like a full-on puke. Like, come back and look at this, and a look at the way that the volume went and everything. This was a puke. This was a puke. Somebody straight up puked out. I don't know, whatever it was that they did, because this was the initial reaction. This right here was the initial reaction, and then it just kept dumping and dumping and dumping. And it was about 20,000 contracts. That's actually a pretty big move to happen on just 20,000 contracts. But like, this was like practically a stop out move. And I think that what happened was then you had everybody short and they had to cover it, which is this right here, right? So to perhaps about right here is where I was thinking, okay, those are the guys stopping out. And now it's gotten to here. Now we're in a bit of a liquidity hole. What happens? And what happened was we got a further move, which is essentially this thing right here. Now, this thing does not necessarily look to me like a large meta order. So I'm not quite sure what to make of it. But it does seem to me like that this is like this extension. You kind of have to separate. There's this move and there's this move. Okay. Right. So I don't know if it's going to go any higher, but the question is, okay, if one of these was like trap traders, what's the other one? I don't think that I can explain this full move just with trapped traders, right? So TLA says that we may be seeing some big bond buyers coming in for the weekend. That's a good theory, actually. Or maybe you're seeing big bond buyers coming in and starting to, you know, say maybe the Federal Reserve is going to do something. Maybe Jerome Powell's going to say something. That could be at play right now. I think there are a little too many short sellers in the market. I agree with that. We've definitely, since Donald Trump's been elected, that's kind of what I've been watching every day. That's why there's been a couple of trades where it's like we're selling and then we're like skidding along down the bottom, and I see it like move down a little, you know, like it breaches it by like one tick and then comes back up to the hole, and I've taken those as reversals. And I wouldn't do that, but I've taken those as reversals because I know that the market is just so overly systemically short that you're going to get these things where like it kind of goes down and then quick little move up and then it will continue selling, right? And so I'm basically saying, oh, okay, let's just catch these when everybody's overly short and the short-term players are all getting stopped out on trying to ride that momentum. If you come across a good Black Friday deal on a desktop, can you let me know? Okay. I mean, if you're willing to build it your own, I think that you're going to see some insane deals, actually. So I've talked about this before, but I just go into it for a little bit. There are we are on a new generation of CPUs, essentially. And this new generation of CPUs on the AMD side uses a new socket called an AM5 socket. Part of the deal was that you used to have like these pins on the processor, and like if that pin got bent, then the processor was useless, right? So they changed it around and they said, you know what? Let's put the pin on the motherboard, because the motherboard is much more replaceable. And that way, when you have like a $10,000 CPU or whatever, it's not completely busted by dropping it. Okay. And so that meant you needed a new type of board. And originally, those boards were really expensive. They've come back down to a point now where you can get them for like $200, $250. So there are reasonably priced AM5 boards now. So most people, especially gamers, when they want to build a new PC, before they were kind of still getting the old ones because the motherboards and everything were too expensive. Now the prices have come down enough that you're seeing a lot more people convert over to the AM5 motherboards. Okay. But for what we do in day trading in particular, where we don't necessarily need the most amazing PC, but we do need a pretty performant PC, and especially on things like RAM and having a lot of disk space, like you can have some pretty big requirements, but you don't necessarily need the newest CPU, right? Like we were getting along just fine with a CPU from like 10 years ago before I upgraded my PC last year. So for that, you could still get an AM4 motherboard, right? So if you're willing to get the last generations... Oh, and another thing I should note is that they put out a new generation of CPUs, and apparently the AMD one is a significant improvement, and it's a lot better than the Intel one, okay? So probably what you will see this coming holiday season is insane discounts on AM4 motherboard level stuff. So if you're willing to get an AM4 motherboard, you should be able to get a PC for insanely cheap prices. You might have Obsidian is saying I can get a 3070 for 400. Yeah, that sounds about right. I got my 3060 for is it a 3060 or is it a 4060? I don't remember, but I got mine for like 350. The prices of those haven't really changed. But you're looking at a situation where, like, if you're willing to go for an AM4 motherboard, like your graphics card might be as much as the whole rest of the PC. Like, I think that you might be able to get a really good AM4 motherboard based PC for around $400. I have to look, but that's kind of my guess. I'm not as tuned into the hardware because I haven't been looking for myself. I don't really need to get a new one. I think that the next sort of thing that I might buy is more likely to be like rack servers. Like I've seen some of these 1U rack servers that are, you know, kind of more designed for a home use and are quiet and everything. So I have like 2 desktop PCs in my rack right now. Like they still have the old PC, and that's what all of the Discord scripts run off of. But if I want to have like a Kubernetes cluster, I'd want like 3 of those things, right? And then I would also like to have some like a data lake. Like I'm saving all of this data and it's fine. But what if we had NinjaTrader running on a virtual machine, just collecting the data and outputting it out, and then spitting it out, and I was doing it for every instrument all day. And then I could do data processing on that data and, you know, give that process data to you guys on things and you know, sell it to you. Are you guys trying to run Tor nodes? Not a Tor node, but I am running a Kubernetes cluster. So I don't want to really like pull the camera out so that you can see. But basically what it came down for me was that I had a PC and a UPS, and I wanted to have 2 PCs. And like all of the cables and like the space on the floor and everything that was taking up was retarded. It was retarded. It was a huge mess. So when I went over to the rack, now I've got 2 PCs in the rack. Yeah, I got 2 PCs, two UPSs, although one of the UPSs doesn't work, and I never really kind of bothered to try and fix it. I don't, you know, it was beyond my skills to fix it. It might just be dead. I'll replace it. I still have the other UPS in the back there, which is kind of funny, but I got a little USB hub now, and yeah, I want to buy like 3 little smaller servers to have like a Kubernetes. I want to have a node. Like maybe this one PC goes away eventually. Or maybe one of the things that I've thought about doing is right here where the chalkboard is, because I don't use the chalkboard that much. I spent so much time thinking about the chalkboard and like we should do content with it and everything, and now I'm kind of like, oh, if I'm going to do something like that, we should just make graphics and stuff. I won't sell the chalkboard. It just might not be there. Maybe I will just put it outside or put it downstairs or somewhere where the kids can play with it or something like that. And then we would still have access to it when we need it, right? And then I build another desk over there. Like maybe a standing desk with a treadmill on it that is set up for maybe I have a laptop over there so I can do my kind of like my daily job work over there, and just have a second PC that like my wife and kids can use, something like that, and have more like servers over here. So servers over here, I think it would be like 3 PCs for the Kubernetes node, and then another PC for the data lake. The data lake being like a place where I have a ton of storage, and I'm storing all of my source video and all of my market data. So something that is like a PC that's just a ton of solid state drives. When do you have the level 2 data collector that can replay the data together with price tick data so that we can backtest level 2 data indicators? Okay, so I have the data pipe, which doesn't necessarily let you like backtest it, but it allows you to permanently save that data so that you could do analysis in other programs like Python. Okay. But I have all of the indicators. They've been exporting data for a long time. Like it will save, it will create a file and it will save it to a file. And they all do this. Okay. But what I've recently done is I have fixed some issues with them so that they backtest. So basically what you can do is you can, you put the indicator on a chart, have the indicator there on the chart for a couple of months, and then go and create a NinjaTrader backtest that uses that indicator, and that it will import the data and it will use that data in the backtest. And so you can do the backtest lightning fast. Do you have any algorithms in the works that will just run/trade passively for you? I mean, I kind of have some ideas, but I haven't really put a whole lot into that. There's like too many things to do, man. So we did do some back testing on this market order imbalance, and we discovered some interesting things with it. The first thing that I discovered with it, though, was that like it seems like that it doesn't work very well when we're coming into the month that it changes. So we're actually kind of starting to get into that time. Let's see here. Yeah, I think that next week and the week after that, you should be wary about running with order imbalances. That you might see a lot of situations where you're seeing a strong market order flow, but they just clash up against the limit orders, and the limit orders win. Based on this theory that we pulled out from this last backtest that we did. So what I need to do is I need to make an indicator that tells me like how many days until rollover or something like that. And so I can say, okay, when we are 14 or less business days before a rollover, I want to do something different from the rest of the time. So that's the first thing, is I want to add that filter on there. And then there was a couple of, well, there is a little period where I've kind of been, where some debugging, so there's some data that's not good. But I think we probably start from this point forward and do the next backtest. Then there was a couple of other little weird things that we wanted to try. Like, we found that while it was giving us pretty good signals, it wasn't giving us a very good price. So, like, there was a really strong probability that it was going to go your way, and there was a really strong probability that you would get a good, strong move off of it. But there was also a really strong probability that you would have 4 ticks adverse excursion against you, and we want to reduce that adverse excursion. So I have a couple of ideas about that, but I'm not really super positive about them working. So I don't know. Then another thing would be, let's put them on ES. And another thing would be, let's put them on a short time frame. Like, let's put them on a 10-second chart instead of a 1-minute chart. Right? Because I'm kind of thinking, if I want to make something that runs trades passively for me, maybe I need to go into sub 1 minute time frames. Now, on that note, by the way, yesterday, and I haven't really taken anything in the S&P 500. I'm not really expecting anything to really happen right here. But we were talking yesterday, you guys were talking about Fat Cat, and they're like, well, I'm pretty sure that Fat Cat, like, makes a living from it, or whatever the deal is. And I just kind of dismiss it because, it's not empirical evidence, right? But afterwards, I kind of was like, oh, actually, I'm wrong about one thing, which is that I actually do kind of know what he's doing. I do kind of know what he's doing. So I don't know how well it's actually working for him. Like, for me, I tell you what, man, I keep going through it because I'm in between jobs right now, right? And so there's this one kind of a voice in the back of your head, and something that people have said, which is like, okay, Seth, so like, here's your chance to just trade, right? No, I don't want to be taking on risk with that money in a period where I don't really have a whole lot of ability to take on risk because I don't have other sources of income. So that doesn't work very well. But it's tempting. And I'm constantly seeing all of these people now. It's getting into one of those periods again where there's all of these people coming out making extravagant claims that they make. So Fat Cat's not really making that claim. You're maybe making it for him. But I saw this one on Reddit that was like, oh, hey, yeah, I'm a profitable trader and I make $40,000 a month from it, mostly through prop firms. I'm like, okay. Sure you are. Let's see. What is it that he's doing? And I start, digging into that because a lot of people were commenting on it and were interested in talking to him. And he was basically like, let me give you a hint. Just, put your favorite moving average on a 1 or 5 minute chart and then look for coincident like crosses with Fibonacci numbers. and I just facepalm. I'm like, really? You really expect me to believe that that's making $40,000 a month for you? I highly doubt that one. I highly doubt that one. But there's all these people coming out saying it, and I'm like, Seth, you got to get in on the YOLO trade in equity index futures, and then you go and turn around and do it on a combine or something for the funsies. And then on top of all of that, I'm just spending a lot of time thinking about the combines because for the last week and a half, I've been writing a video about the combines. Might be some people because I had a little like Dustin with another creator. They might think I'm making it because of them, but I had already basically written the video. I had Live Action says I have a friend that told his wife if he lost 1,000, he would stop playing poker. Well, he ended up winning the big one, World Series of Poker. Wow, really? That's crazy. Yeah, but yeah, like one of the things that I'm kind of looking at is like, okay, I think that a lot of the edges that we should be looking for are really more like, we tend to buy at this time of month. We tend to buy at this time of day. Like what I want to do is I want to have, here's the order flow. Like maybe we could take it from market order imbalance. Maybe we could take it from cumulative delta. And then we have all of these oscillators that are like, this is what day of the week it is. This is how many days until expiration. This is what day of which business day of the month it is. And all of those sorts of things, right? And then you put that into machine learning, and you have the machine learning find for you if there are flows. And you would need a lot of data, but once you have enough data, you might be able to sniff out some of these flows. And I think that those could be better, for like the kind of time frame that we're looking for with our discretionary trading. I think that those would work a little bit better. And for the sorts of things like the analysis that we're doing, oh, hi, Hannah Steffa, welcome back. Something that is really just doing active trading for me, that I need to go shorter time frame on that. So, and I'm also kind of thinking, if I want to do something on ES, I want to do shorter time frame. But the idea that I had though is, well, what is it that Fat Cat might be doing that might have an edge? Well, there is something that I've seen him talk about that we do know is a thing, and that is he was basically saying that he was trading the pullbacks on holes that are created by S&P. So, if you have a strong move and a lot of flow has come in, when that flow subsides, you tend to come back a little bit. And so it sounded to me like he was kind of trading that pullback, which is kind of like a risky sort of a thing, but like there are algorithms that do that. Like I think that you can kind of sort that out, because you as a person kind of have the ability to say, well, that move, that was something like really serious that's really going to continue and trend, versus it's just a temporary aberration and I can trade against it, right? So we could maybe look for that. But like I said, I've got a bunch of different things going on. Yesterday, I recorded my video, and then oh, by the way, I should check this. If I come into Audacity, here's the mistake I made. As I record on the camera, the video part, and then I do my own recording in Audacity. I record the audio part on the PC in Audacity. You can see the microphone in the frame usually, right? Yes, it was. So I think it was because I installed a new version of Audacity. For some reason, it doesn't put your recording level at 100%. So when I recorded, it was only recording like 50%, and it was clipping it. And so then when I did my mastering and everything, there was a lot of clipping on the audio, and I didn't like that. So I had to go back and record it again. So I thought, because I did a pretty good job, I was like, how quickly can I get this all set up and everything? And I've got it to the point now where, because I do a couple of little things with the thing, like there's my studio monitors back there. I don't want that popping out of the back of my head, so I pull that down, and I move the screens up a little bit so that you can see them in the background a little bit better and things like that. And I can do all of that in about 10 minutes now. So 10 minutes up, 10 minutes is down, and then like 30 minutes to record it. And so like I can be in and out and done in an hour. So I did that yesterday, and then I was like, oh, so I'm going to have like 90 minutes to edit it. And if all I have to do is just do the quick cuts, which frankly my editor said I could just send it to, but I still want to do the quick cuts. 90 minutes, 2 hours is probably enough. And then I have it and I'm done. And then I can do the other stuff that we talked about yesterday in the afternoon, right? Well, it didn't work out that way because I had to record it again. And so I basically lost the day recording. But, you know, we've got this list. There's some more reading that I'm going through. But I guess one of the things that I'm saying is that on the let's make a high frequency trading algorithm sort of idea, we're collecting data, right? And I'm kind of questioning, how much data do I really want to be collecting? Right? So, like, should I just be copying this window and copy this window for ES and then copy both of those windows and do both ZN and ES on like a second time period? I don't know. Maybe it's a lot of data. I think that it would probably be fine. Something about me just you know what? So why am I fighting with myself here? Duplicate in new tab, and then I'm gonna make this one be ES. Okay. Then I'm going to do this again, ZN, and I'm going to have this one be 5 seconds. 5 seconds. Duplicate a new tab. So then on both of these, we'll add all of the indicators. Speculator Seth. I guess I need to make one that's cached cumulative delta, because I do kind of want that. Largest resting orders, level 2 changes, market order imbalance. What is it? Oh, I had level 2 changes. Resting orders. There's 2 things. I could maybe do that today. Yeah, okay. Anyways. Market order imbalance on this one. We want a period of, I don't know, what should it be? Over the past 5 minutes, maybe? So if we're doing 5 seconds, sorry, what is it? It's 12. 12 times 5 is, why am I having a hard time? Is 60, right? So we want a period of 60 to be the market order balance of the past 5 minutes, right? Yep, and keep it overnight. No, well, I don't want to take it trades it overnight. So one of the things that I guess this is kind of based on a theory, and I can collect the data and everything and like filter it anyways. But I have a theory that order flow is different during the most active times than it is overnight. And so running your analysis on all of that data instead of just on the data in the time frame that you care about might screw things up. Oh, I'm like, why is this pulling it up on ZN? Because this should be ES. There we go. Okay. Okay. Now I got 4 of them. But we are kind of in the collecting data stage. And I guess we could be spending more time on the momentum strategies, right? But let me open this up. The to-do here. Didn't I change this? Q. There we go. That one's better. Account for tick replay. Let's call it tick replay merge. Merge tick replay. So this is like, okay, when the chart is running, it caches data. When it's not caching data, you can use tick replay data on some of these. So on some of these, like the inventory cost basis, market order imbalance, cumulative delta, those ones you would be able to merge it with the tick replay. So you can do those. So those are kind of the bits that we want to look at. I think one of the other things that I'm getting at here, like, so like, I guess to me, I'm kind of making a trade here with my content. Now, basically what has happened is everybody has gone all in on the trading combines. You look at most other YouTube creators, they are doing trading combines. They have affiliate links for trading combines. Some of them like really go ham with it. There are some of these guys that are just all about that. Here's the best prop firms to trade with today, and they have a video out every day. And I've seen more than one person like that. And I say that the trading combines are hurting you. Trading combines are hurting you. There are more sustainable, better strategies that don't fit the trading combine parameters. Swing trading is a you're more likely to have success with that, for instance. Okay. There are things where you kind of have to take on a little bit more risk, and that will blow the combine, but you'll do better, right? And the trading combine encourages you to push so hard to meet their like levels, you know, that you're just really likely to blow up. Okay. I'm trying to explain all of this to him, but I don't need to explain that to you. It's going to be in the video. Okay. I don't like the prop firms. Okay. But you can clearly see prop firms have money. They're advertising. They're pushing it out to everybody. So I'm kind of making a bit of a trade here. I'm kind of saying, you know what? I think that I can make videos about why you shouldn't be using the trading combines and you should do other stuff. And that's a better opportunity for you. So if that's the trade, one of the things that I've kind of thought on here is like, I would like to make an algorithm that's disruptive to that. I want to make an algorithm that's like, okay, here's something that it's completely automated. It does its trades, and like maybe even something that is a little bit disruptive. Like it's doing like something really degenerate, but on average it gets away with it and you can pass the combine with it, right? I still kind of have that dream that I do that, and then you put it out and have all of these people trying to pass combines with it and causing all sorts of chaos from that, because it can pass, but you know what I mean? Yeah, I am sure it is because they say you have a 50K account where you can trade 5 minis, but in reality it's a $2,500 account with futures day trading. But yes, the reason that they call it a 50K account is because they intend you to take a $500 profit or loss per trade. So they basically say, right, each trade should be like 1% of your portfolio or whatever. So if the portfolio is 50K, then that means that each trade should be 1% or $500 win or loss, right? So then you come in and you look at it, and it's like, what is that on the S&P 500? And it's basically 10 points. It's basically 10 points on an instrument that moves like 30 to 50 points a day, right? So you have to look at, look at it two ways. There is the amount of money and the percentage value that you're losing per trade. And then there is the percent of the volatility of that instrument that you're making or losing per trade, right? So because you can take multiple contracts, the amount of money that you're winning or losing per trade, you can kind of size it up against your account. But you don't get to control how much the market moves, right? And how much the market moves is what determines what kind of opportunity there is out there and things like that. The smaller a percent of the days of volatility, and you should think of it on a day time period. A lot of people will do it like, here's a swing and I should set things based on a swing. But think of it from a day period, because you're going to take multiple trades in a day, right? The larger a percentage of the day's range that your stop can be equal to, the less likely you are to get stopped out of a trade. And that generally helps you, generally speaking. Okay. A lot of this game really does turn into the guy with the largest stop wins. Okay. Most of the back testing that I've done kind of suggests that having a stop hurts you. That, you actually, it's better to have a signal that is, you get in and you hold it for a certain amount of time, or you have an entry signal and an exit signal if you have exit signals that have edge to them. But that you basically, you want to expose yourself to the market for a period of time, and then you get out, and there's going to be a distribution for all of those trades. Some of them make a lot and some of them don't make a lot, and all right. Now you get a distribution, and when you get a distribution, then you can kind of get into the things where okay, I have a far left tail, but I have a really, really long far right tail, and I really make my money here, right? And you can only do that if there's a range in what your profits and losses are, right? on an individual basis. And so, yeah, you still need to have a stop, because there's this left tail and you've got to cut it off somewhere, right? So you need to be able to cut it off at a place where it's really only like the really big benders that you're losing on. You don't want your stop to be like right there, because once you put your stop there, then it's like there's a bunch of things over here that actually end up coming over here as well, and blah, blah, blah. I'm not drawing a very good picture, but you get what I'm saying? So like the larger your stop is, it helps you. And so what the combines do is they're basically sizing things for you in a way that you can't really have a large enough stop. Like if you're going to trade one ES contract, your stop literally has to be 10 points. Like your stop has to be 10 points. You can't handle if you have a loss larger than that, you will break the daily loss limit rule, right? And I'm kind of saying that like you kind of want to have a stop that's like 2 or 3 times what would like normally ever happen, right? So I really hate this thing where like your average loser is like 2 times your average winner, and you have like a really high win rate or something like that. I don't do it that way. The way that I do it is I want my winner to be about the same size as my loser. So if I know that an average move is like 10 ticks over here in the micros, then I know that when I'm 10 ticks down on a loser, I'm probably going to, I want to take it off there too. But I don't put a stop there. I have like the protective stop is going to be like 20 or 30 ticks away. Something that like will almost never get hit unless there's something really crazy happens in the market. Like some really big market breaking event, which hasn't happened in a long time, but maybe we'll have them happen when it's Donald Trump's back. Okay. And then I'm taking it off discretionarily. Like it can go 10 ticks against me, but most of the time it comes back enough that I can, maybe even get break even again. Right? Like it's just, I'm able to give it more room to breathe and still keep my MAE, MFE roughly equal. Does that make sense? So like, basically, the combine sets it up so that you have to take too much risk that you can't do that. And so you will hit your stops and you kind of get diced up. Right. And then you would say, well, okay, yeah, but you don't have to trade a full ES contract, right? You can trade a micro, that's 1/10 of that. And then you should be able to handle 100 points in a day. Yes, you could do that, but then it will take you 6 months to pass the combine. So that doesn't really make much sense, right? So the profit target is the thing that kind of kills you in the end, right? Prevents you from being able to size appropriately. Because what you would probably want to do is like take a micro contract and have a really massive stop and make 10% a year, and not 3,000, not 100% a year, right? So much larger stop than people normally have, but also a profit goal that is 1/10. We'll see how the video goes. I have this song I made that is kind of like, it says, it's a song called Transition by Underground Resistance. And he says, did I let others discourage me when I knew that I could? Wait, why am I having a hard time finding the start of it? It's probably because there's other music going on right now and I can't hear myself over it. But the song gets to like that there will be people who will say, don't do that, that's too risky. And you take that risk and have no fear. And I was thinking about this video because I think there's a lot of people who are not going to like it. Like, it's a controversial thing to say because I'm basically saying to 90% of retail day traders at this point, you're suckers. You're buying these things, you're suckers. Yeah, like maybe there are some people that make money from it. Just like when you go to the county fair and there's carnival games and you'll see people walking around with a huge stuffed animal. But by and large, it's set up that the amount of money that you put into it, like you might get a payout, but that payout is only equal to the amount of money that you put into it trying to get to that point. And most people aren't going to pull out more than that. So if you're doing this over and over and over again, like, okay, try it once, try it 3 times, but then if you're not able to pass in 3, Like, I would say try the combine 5 times, and if you don't pass it in 5 times, you should stop doing it. Because what you're doing is not working. You should be able to pass it randomly 33% of the time. Right? They're not going to like it. But then I keep saying to myself, no. You say what you think, and they don't like it. Who cares? No fear. No fear. Don't need to be worried about what they're going to say. Since when were you ever worried about what anybody cared, Seth? But anyways, the reason I got on that is because I kind of feel like one of the things I want to do with an algorithm is another play on that same trade. That I want to make an algorithm that is degenerate. And the issue is that being degenerate doesn't seem to be enough. Like you can pass it being degenerate and everything, but not more. Because I'm seeing a lot of people that are like, there's one guy, he said, I'm like, what's your hit rate on them? And he says, I pretty much pass every time that I do it. So I don't know how they're doing that. Because every time that I've back tested the sort of things that these people are talking about, it doesn't perform that way. We need to give the degenerate algo a kinky name. I just need to go and find out what my porn name should be, and then we can give it that name. Octavia says I call shenanigans on all of the prop crap. Well, so tell me this. When I mentioned earlier, I saw somebody on Reddit. They claimed that they were making $40,000 a month from prop firms. I do not believe. Do you believe that? I don't believe them, especially based on what they said they were using for their trades. See, Octavius doesn't believe it either. Maybe if you were getting it from affiliate links. So that's the other one that I'm not sure I believe. Who was it that was saying? It was Mission Eater. I don't know if you're here today, but there was this one creator that they were saying, you know what, you guys are only getting paid like so much for these prop firm things, but I can get you like $40 a pop on affiliate link. I don't think that he was saying that it was a different prop firm, because how does a prop firm pay you $40 on an affiliate link and still have margin left over to make money from it? But anyways, if you are making $40 and you had 1,000 affiliate links in a month, that's $40,000. And that guy was claiming to have made $40,000 in a month on prop firm affiliate link commissions. Like, what? So crazy. I mean, like in all seriousness, if I hadn't gone down the route that I did, if I said if I doubled down on prop firm accounts, and I probably would have passed the ES one at one point, and I went all in on the affiliate links and everything else like that with the authority that my YouTube channel had at the time and the authority that it had on that specific subject and everything, I would probably be the prop firm king. It's serious. Maybe I'm delusional, but I really think that if I had gone all in on that I could be the prop firm king right now. Would I be making 40? But I don't think that it would be making $40,000 a month from a. No way. That's crazy. That's crazy. Hey Paul, talking about your name. If you on a brand new empty account, you become the first option once these exact letters go in. Speculate, and once you put the O in, that's sweet, dude. Yeah. But, well, you know what? So our last couple of videos, I was kind of a little bit disappointed in the performance of them, and I'm kind of thinking, though, that probably a major factor behind that was just that I hadn't put a video out in a long time, right? That I just hadn't put a video out in a long time. And the video that we put out this week, it's doing pretty good. It was at the high end of the range. This range right here is the last 10 videos. So there are definitely videos I've had that have done this before. But we got a little spike here. And look, there was another little spike yesterday. And when I come into the reach, you can see like the YouTube algorithm was like, oh, well, this one is working. Let's push it out. It found it. So it's going to know. It might not have another rise like that. It'll probably just be consistent from there, but that's really good. If this next video about prop firms does really well, it can build on the success of that video, and that's a video that could go super viral. It could. Yeah, the lack of video is kind of hurting. But I don't know, man. I'm looking at the future, and it's kind of looking to me like that the either way that things go, that we should be able to put videos out more consistently now. So it's all good. Yeah. I think that a lot of I think the way that it's going to work is I'm going to get the ones that are like currently on the table, and then it will turn into I will have videos that are super general, like what should your stop be set at, how big of an account do you really need, those sorts of things, interspersed with interviews of researchers, not other YouTubers though. Don't give a shit, but researchers that can really prove things for you, right? Can you tell me why you don't like volume profile strategy in detail? Because for me, it's working right now. Sure, because I backtested it. So what is the strategy? There are some things that you can do with volume profile that are really complicated, and I'm not exactly sure. One of the ones that I had kind of looked at and we did a back test on, but we could maybe look at again, was like you're looking for the edge of a volume profile, and if it gets past that edge, then you go for momentum or whatever. But it didn't work. But the setup that I tested was if we open up below the previous day's range, take a trade that it will come back to the previous day's point of control, and have all of these set profit targets, and it didn't work. It wasn't profitable. Right, like this is where I keep coming. Like, one of the things that I find really frustrating is that I do find people that are claimed to have success and are willing to tell me what it is that they're doing. And then every time that especially if I backtest it, it almost always comes out immediately that it doesn't work. It's like, well, it's been working for the last month, but then the whole rest of the history, it's terrible. That's the one thing that I run into a lot. Or like we start trying it and it just doesn't perform in that same way. It's like all of these people, I've tried doing kind of like price action-y sort of things. And I don't, these people are saying they pass every combine with it. I don't know how they're doing it. I mean, part of me wants to believe that they're just lying. I think there are some people I want to trash people, but like I think that this was the case with Ace, that he was really good at, saying here's what I'm doing, and like he did have some success, but he was selling it way better than what the amount of success actually was. And then sure enough, it was just random, right? And it wasn't working, and then he switches over to something else kind of nonchalant, like kind of ignoring the fact that the supposed edge that gave him credibility didn't work. you know? And I kind of suspect that most of the people that I see that are you know, willing to say what they're doing, sort of a thing, that's what they're doing. And that's why the result always comes like that. I guess the thing is, I haven't dug in on a strategy like that for a long time, and I'm kind of like, well, we might as well. But you guys haven't found one for me. You gotta have one that you really believe in and that you want me to automate. Is what you do. Like, we want to have something you believe in. Maybe not me, but one of you guys that you believe, because really, like, part of it is a motivation factor for me. If it's like, well, I know it's not going to work, then I'm kind of not motivated to do it. But if you think that it works, and I want to prove to you that it doesn't work and crush your dreams, that's motivating to me, right? So there's got to be something that somebody or a group of people believe in, and that we can automate, and that is kind of degenerate. That there's something about it that is ill-advised, right? That's number 3, and then number 4, but that we still have a really good probability of passing a combine with it, right? Because what I want to do is, okay, let me back up. There's a flaw in the combines. You can come in and you can have a strategy, right, that doesn't work. That just straight up doesn't work. But that over a month period works pretty well. It's kind of like a strategy that does this. Now, let me try it again. I want a strategy that does this. Okay. I want a strategy that does this. Okay. So what happens is maybe up here, you're able to withdraw 5K from the combine before things go south, right? When you lose this thing, what happens? You don't lose any money. You just lose the combine, right? Well, if you're pulling in, so the prop firm, they don't want to pay you that 5K, okay? Right? Because that comes out of their money. Like, if it's live sim, that's coming out of their profits, right? And but it's okay, because they can come back and they can say, okay, like, you pulled 5K, but how many, it's like $140 per combine, something like that, right? Divided by 140. So, like, we just need like 35 people paying a combine to make up for that. And when you consider that it's like, okay, it takes 10 to pass, and each one of those tries might take 2 months to try. That's like 20 right there already. Okay. So let's do it that way. Let's say that on average they have 20 combines fail for every person that gets a payout, right? Then that means that I want my average payout to be 140 times 20, maybe, right? 3,500. Okay. So if you can get a strategy that pays out more than 3,500 on average every time, prop firms are fucked. You get what I'm saying? Like, yeah, it's a strategy that doesn't work long term. If you were trading it live, you would blow the account every 2 months or whatever the deal is. But if you can pass the trading combine, and you have these masses of people out there using this strategy and getting payouts, it completely screws their business model over. You get what I'm saying? That's the strategy I want to develop. And I kind of suspect that there are people doing that, because there's these people claiming that they that they pass the combine every time and that they're getting like tens of thousands of dollars in payouts. And maybe that person's just like 1 in 100, and we've just got to turn that into 1 in 20 to screw over their business model, right? That's the trade that I want to make. Think about this, guys. Seriously, I'm asking, I'm begging for your help. Think about this. What are something? It doesn't have to be something that works long term, right? It just has to be something that works long enough for somebody to get a $5,000 payout from a trading combine before they blow out and try it again. But it needs to be something that is automatable. Basically, it needs to be automatable so that you can run the combine on it, and we can get this mass number of people doing these combines and screwing these businesses over. I'm sure that the businesses will probably be like, no, actually, you can't do this one. That's not okay. They're going to change the rules at that point, right? But then everybody will see that they changed the rules. Yeah. TLA says there's 5 different opening types, 7 different data types. That's it. I don't think there's any mechanical thing. Well, again, here's the thing. When we've had this discussion in the past, it's always been, okay, yeah, like there's people out there that are making claims about profits and everything, but like they only have 1 or 2 years worth of data. And I really think that for a retail trader to have success on like a 5-year period, you probably need to be doing something discretionary and have real informational edge. It's kind of my claim. Okay, but we know that there are people that are able to do like quite amazing in the interim. They'll blow up eventually, but they have a lot of success in the interim, right? So it doesn't have to quote unquote work. It just has to work over a 2-month time frame regularly enough to screw up their business model, right? So that puts like everything back on the table, right? Because there's all sorts of strategies that we know of, even kind of on the technical analysis side, that it's kind of like, well, on a long enough time frame, that doesn't work. You probably think that it works because, you know, the stats and everything. But now all of a sudden, those are okay. Now all of a sudden those are okay because the objective is not to have a successful long-term trading strategy. The objective is to have a trading strategy that's successful just long enough to fuck over the prop firms. So think about it. What's the one that you're most interested in? What's the I mean, it seems like everybody, it's that they're doing its price action. So how do I automate it? I've had some automated price action strategies, but not ones that were took enough trades. That took enough trades, right? That's what I want to work on. That's the degenerate guy, YOLO trade ES. YOLO trade ES, right? And then here's what we do. Is we're putting out the video. I don't know. It probably won't be next Monday. It'll probably be the Monday after that. You know, like a video every other week. So give the editor a good amount of time to edit it and everything and make some revisions. But we'll put this video out where I basically it's prop firms are for suckers, and I bash about it. And then probably there's going to be like dozens of people come in and comment on it that won't be able to help it, and they'll just say, no, it totally does work. I'm making tens of thousands of dollars, and you're just bitter because you couldn't pass it, or you know, then do all of that sort of thing, right? And then we go and we develop this strategy, and we put it into practice, and we make a video about it. We say, look, here's this automated strategy. Like, you can totally use it. I passed with it. It has a tendency to pass. Use it, right? And then everybody that watches the video and warn them that, well, we know that it doesn't work long term, but it's enough to get you payouts on the combine, because I kind of want to screw the combines over. And then you get all of these retail traders using this strategy. Like, that's what I want to do. You get what I'm saying? But I kind of need your guys' help, because my whole thing has been from the very, very beginning. This is what I want to accomplish. I'm playing the long game. I want to, like, you know, run a big fund. I want to do big things. I don't want to just, make a few $1,000s here and have a good run and then be like, okay, like we're good. Let's quit trading yet. No. I want to make the big money at some point and do position trades and all of these sorts of things, right? And so I've optimized everything in my lines of thinking and the things that I look in and everything towards that goal. And that's why I have such a high standard and why I have kind of guided you guys towards that direction as well, right? And now all of a sudden we're saying, well, let's take this little detour and, do the degenerate thing. The thing that's just kind of short term. It doesn't work in the long run, but in the short term, it works pretty okay, right? Well, I've optimized so much against that I'm not going to be very good at figuring that out. So I kind of need your guys' help and, all of the people that are going around yapping about these sorts of things anyways to figure out what we want to actually do, right? Road says, when you keep an eye on the equity curve of your strategy, you can switch it on and off. When the equity curve is getting bad, you can do it with a moving average as long as your system is performing. Yeah, actually, that's something that I've kind of messed with a little bit, but I haven't done it in that way. Like I have these risk management bits where it's like, okay, if I've lost more than X amount during the month, then we just don't trade the rest of that month, or we don't trade for a couple of days or something like that. Or like if you have so many losers in a row, then you stop doing it, right? Or you have so many losers in a day, you stop trading that day is a way that I've done it. But I've never done it where I graph the overall equity curve and switch it on and off. So that's really interesting because it's I would need to know what the performance of the strategy would be if I was still trading it, but then don't actually submit it to live unless it's trending up, essentially, is what you're saying. That's interesting. I do wonder, one of the things that we might be able to do in there is, it could also be a little bit of a switcher, right? So I kind of think that's what I have to do for order flow. I think that I have to have two order flow algorithms, essentially. And one is an aggressive market taking algorithm, and another one is a passive market making algorithm. And I switch between those based on both the time of the month and how they've been performing. Yeah. And I guess the thing is that the strategy could be an order flow strategy. I think that we're probably more likely to get something that really works that is an order flow strategy, right? So there's a couple of these naive approaches to order flow that might qualify. But again, that's the thing that's stopping me is the motivation that is just okay, so what's the idea that we feel motivated enough to pursue on this, right? So I kind of need your guys' help with that. Tell me the ones that, not today because I gotta get going, but tomorrow, Friday would probably, wait, do we have any we have retail sales or something tomorrow, don't we? Yeah, we have core retail sales tomorrow, so maybe not that. Maybe the 18th, next Monday. So give it a good think. On Monday, we can make all of the proposals and we can put them in a list and rank them and start doing the work at going through them. Okay, guys. I better get going. I will see you all tomorrow. Stay excellent, team.